Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market as usual. So the gold shows really very fast action, and actually we need to increase the scale to understand what's really going on here. And on the daily chart, it's not sufficient space to see the larger picture, and on the daily we can't suggest something which really could happen here because it's just too small scale for this really fast action. Currently, guys, those of you who are watching for our monthly weekly reports probably remember the monthly chart, and actually 1383 is the major all-time monthly resistance. So I even could show it probably on the monthly chart. Here you could see. So that's the chart of the so-called compound hand shoulders that we're talking about within a few months already. That's, guys, by the way, the reason why we suggest that this could be a major reversal on the gold market. But what is more interesting for us right now is, of course, the wash and rinse of the previous tops here. So you can see market has exceeded this top, this one as well, and just grabbing the stops that have been placed above this. So this is important resistance. At the same time, guys, we have 1380 major 30% monthly level. Now, as we know, the gold market stands overbought as on the weekly as on the daily, and combination actually creates the monthly stretch pattern on a Jordan stretch pattern. In general, this creates the background for a possible pullback. We are talking about this pullback for a long time already, at least the second week, but external factors every time intrudes and push gold market higher. So currently market is driving not by some technical analysis, some economical factors, but mostly by the fundamentals. So here and there are some political tensions, so mutual accusing and tariffs and so on, and that creates the background for demand for the safe haven assets. You can see the demand for the Japanese yen, you can see the demand for the Swiss franc. Gold market is not an exception as well. But currently, since we can't predict in general these moments as a fundamental stuff, we need to follow the odds. So what is technical analysis? Technical analysis is let's call it as a science of the odds that's applied for forecasting, for trading, and the odds is what is important. Odds suggest that you are not correct every time, but the odds stands in your favor. So in most cases you're correct. If you have a lot of trades, in most cases you will be in a positive mathematical expectation. So it means that odds in current situation suggest that no long trades should be taken in current moment, because market stands at the major resistance, market stands overbought on the daily and the weekly chart. Market hits the minor COP as well here. Grabs have been stopped here. So and currently maybe the background for a possible retracement that we were watching for starts to form. So in the current circumstances, the drop somewhere to B point retesting of the previous tops on 1350 looks very probable. So on the 4-hour time frame chart, we have also smaller ABCD pattern. Market hits the OP recently and starts dropping. If you will plot here, unfortunately I can't do this in a Media Trader, but if you use the 8-hour time frame, you probably could see here the big bearish engulfing pattern. So that also could be seen on the hourly chart. So if you'll combine this, you will see probably kind of the bearish engulfing or something of that sort. Here is also bearish divergence is forming based on right around the major monthly Fibonacci resistance level. So that's actually doesn't bring nothing new compared to what we said yesterday, except maybe that market finally has hit the major level on the monthly chart. But the strategy, the trading plan mostly stands the same for daily traders. Well, of course, you could try to take the short position based on the weekly stretch, trading gold short, but mostly as we have the bullish context, we are watching for a pullback. So we need to get some moderate retracement that will let us to take the long position in the gold market. If you still decide to take the short and you would like to trade gold market on the short side, you need to follow just one condition: to get clear bearish reversal pattern that will confirm this action, but that will create the background for reversal. That could be absolutely different pattern. Maybe it will be weekly bearish engulfing. Maybe it will be something of that sort. Maybe it will be hand shoulders here. But you need to get this pattern before taking any short position. So that's necessary because, as you see, the overall upside action is very strong. Fundamental backgrounds hardly could be predictable in the current situation, and trying to take the short position without any clear pattern will make it difficult to find the proper place for stop placing. And when you have the pattern, you could use it for stop placing, and that will be your tool to estimate the possible failure of this setup, and it's in general it will be much easier to understand what's going on based on the pattern. So that's our view on the gold market. So that being said, indeed we see that maybe right now the retracement is starting. So because it's a really important moment, important signs and levels have been hit. But in general, overall trading plan stands the same. We are waiting for a pullback in the gold market.